Good day, my viewers. My name is Olapoju Bamidele. I'm the managing partner of PPS, a firm of professionals specialized in audit and tax consulting in Ikeja, Lagos, Nigeria. Today, I would like to present to you tax implications of changes in company income and education tax act, and how they affect businesses, with effect from January 1, 2020. So in accordance with the Finance Bill 2020, the following are the major changes taxpayer must pay attention to when it comes to company income taxes and education tax. Several sections were amended, so I'll be taking them one by one. Number one, donations in cash and kind made to funds set up by federal government in respect of pandemic or natural disaster are allowed as deduction for tax purposes, subject to maximum of 10% of accessible profit after deduction of other allowable expenses. This was as a result of COVID-19, whereby companies and individuals are making presentation, donations in terms of cash and kind to the government to assist them to respond to the crisis. So government now say, this will now be allowed as a tax deductible. That is, if you have paid any amount in terms of cash, either donation, either cash or kind to government in respect of natural disaster, henceforth, including COVID-19, you can include it as your company expenses, which will definitely reduce your tax payable. All right. So, number two, penalties or fines imposed pursuant to a legislation enacted by National Assembly or State House of Assembly are disallowed expenses for tax purposes. So if you are meant to pay any levy to government or government agencies set up by Act of National Assembly or State House of Assembly, and you do not pay on time, so by the time you pay, it attracts penalties. Such penalties will not be allowed as a tax deductible when computing for your company income taxes. In other words, pay your dues at the right time. Number three, minimum tax of 0.5% has been reduced to 0.25% for annual filing due January 1, 2020 to 31st December 2021. In other words, before 2019 Finance Act, there are computations where we compute minimum taxes, and there were few exceptions to companies that can pay minimum taxes. But 2019 Finance Act removed all those exceptions and now streamline computation for minimum tax to 0.5% of gross turnover. But fast forwarding to 2020, crisis because of COVID-19. Government had decided to say, okay, since they believe that cash flows of companies might have been impacted, due to the economic crisis occasioned by COVID-19, that for January 2020 to December 2021, the minimum tax should be reduced to 0.25%. The implication is, if, for example, your year end is 31st of December and you file an account in 2020, dated 31st December 2019, and you actually did minimum tax, by implication of this law, you are meant to refile with FRS and claim 50% relief, as the case may be, from the minimum tax you have already paid. Number four, incentives for trade or business in natural gas marketing and distribution, which is called downstream, of initial 3 to 5 years tax-free period is still retained. So for players in downstream sector, doing natural gas marketing and distribution, they have they are entitled to tax-free period of initial 3 years, then by extension 5 years upon application. Number five, a self-assessment filed on dishonest basis, if discovered, shall immediately attract penalties. So in other words, it is wiser to file on honest basis so as to avoid a case where you are caught and you are made to pay more than necessary in form of penalties. Number 6, every entity, whether registered or not, must keep proper books of account, whether it is liable to tax or not. Failure to do so attracts penalty of 100,000 naira in the first month and 50,000 naira for subsequent months if the failure continues. In other words, whether you are an individual doing your thing, selling your wares, and you are not registered, or you are an NGO doing your things and you are not liable to tax, or you are a proper formal company in the formal sector, running your stuff, all are meant to keep proper books of account. In the event that you are checked upon, even though by law, maybe you are, for example, you are exempted from paying tax, maybe like NGO and the rest, you will have to face penalty of 100,000 naira in the first month and 50,000 naira for subsequent months the failure continues. So in other words, ensure that you get the services of a bookkeeper to properly keep your records for you. Number 7, electronic means can now be used to serve notice of assessment by the service and an objection by the taxpayer. This is to comply with the digital age. You don't need to carry your paper to submit at service FRS, or them to be sending people to your office to bring. Electronic means by email can now be effectively used, now legalized, that you can get your assessment by that, and that you can also file your objection through the same means. Number 8, change. Undisputed assessments are now payable within 30 days after the notice of the assessment has been served. Undisputed assessments. If you have an assessment that is no more subjected to dispute between the taxpayer and the tax authority, that you have reached a final conclusion, so you are given assessment within 30 days, you are meant to pay. Anything outside the 30 days, you have to pay with penalties. So previously before this Finance Bill 2020, used to be 60 days notice. All right. Number 9, cost of developing or purchasing of a software is now recognized as a qualifying expenditure, which attracts capital allowances for the purpose of income tax relief. So this is good news for companies that develop softwares, or companies that invest in softwares. You can now claim some tax relief in form of capital allowances because of your investment in softwares. Number 10, a small business shall not be liable to 2% education tax henceforth. As you know, Finance Act 2019 defined a small business as any business or an individual whose gross turnover is less or not more, less or not more than 25 million naira. It's a small business. So it was an omission actually in 2019 Finance Act, when you are not paying company income taxes. So where will the education tax come from? So now it has been eliminated totally. So, but I want you to also know that the qualification not to pay VAT as small business, not to pay company income taxes, not to pay education tax, does not say that such companies should not deduct and withholding taxes. So in other words, all those relief for small business, if every other condition that are meant to be met are not met, if any of them is not met, you see, such small business may not be able to get those reliefs at the end of the day. But this one will only surface during tax dispute, during tax audit in the future. So we have to be careful. If you're a small business and you want to claim the relief that you are not charging VAT, you are not taking VAT, and that you are not paying education tax and company income taxes, what of other conditions that you must meet? Filing of your annual returns at the right time, and all the rest. You have to. That's why you need a consultant to enlighten you more on this, so as not to fall into an error. Number 11, new definition of gross turnover. It means the gross inflow of economic benefits during the period arising in the course of the operating activities of an entity, when those inflows result in increase in equity other than increase related to contribution from equity participants, including sales of goods, supply of services, receipt of interest, rent, royalties, or dividend. This new definition was necessary, and I believe this definition is in tandem with IFRS 15, International Financial Reporting Standard 15, that defines what a gross turnover is. This is very necessary because for all taxes that are computed, sales or gross turnover is one of the major bases to arriving at any tax computation, be it company income tax, education tax, VAT, and the rest. So it was very important for this new definition to be brought into the law, so it can be clearer to everyone concerned. So effective date for the implementation stands at January 1st, 2021. Now, should you have reason for clarity, you want to make impact assessments on your company, how these changes in company income taxes and education tax affect your company or your operations, please feel free to give us a call today through the numbers on the screen. You can also send us an email through the email on the screen. I'll be glad to attend to you and provide necessary professional advices and assistance and implementation where it is so required. Thank you so much. Until you see you again in the future. Bye.